I'm very pleased to be here. I'd like to thank the good Dr. Governors for giving us such a great kickstart because they spent so much time in their session on SME. The one thing that I would like to take a modest issue with them is they said we may have to wait to Singapore in November or next time we do this one. No, you don't have to wait. If you're interested in SME, there's a great panel and we're starting now. And although I'm an old guy, I'm going to be the most tech-savvy old guy here because I'm going to take questions. And for example, I would also like to say thank you to Simon because Simon already did a question or a comment for us on Sunday. That's pretty good, huh? It shows the importance of SME. But Simon said we must address SME in tech financing. So we agree, and that's why we have this panel. And please do use your features to give us more questions because we will give you as much time as hopefully you do. If you asked a question last time about SME, I can't see it, so please do it again. Use your ability. You're young, you're fintech oriented, you can copy and paste and put it into the question again, right? So I'm Matt Gamzer. As you heard, I work for the SME Finance Forum. That's part of the IFC, the private sector arm of the World Bank. I used to be a development banker. For the last few years, I'm a matchmaker and cheerleader in trying to bring people together in the finance industry and improve the state of SME financing. It's my great honor to be here, and I want to let my distinguished panelists who come from both Asia and Africa and other countries but are working across the two continents to briefly introduce themselves because they always do a better job than the moderator does. So let's go down the row from next to me. So we'll start with you, Marvin.
Good day, everyone. My name is Marvin Cole. I'm a co-founder and CEO of Ovamba. We're a French West Africa focus today, trade tech and fintech firm. And what it means is we focus on trade as a mechanism for growth and development and wealth creation. We provide a managed service. It means we take all the pain points that causes most SMEs to fail, the procurement, logistics, etc. We take that pain on for ourselves, enable them to focus on selling, do what they do best, financing that through our investors globally, and allowing banks to see the data around trade flow and therefore to grow the financing.
That's great. Now, Samir.
Thank you. My name is Samir Vakil, and I'm the co-founder and CEO of Global Linker. We talked this morning, and Chris talked about the human side. I think the governors talked a lot about it, so let me introduce myself a little differently. On the human side, we keep referring to small and medium enterprises, SMEs. But the one thing that's for sure, and we are an SME today in the early stages of our own life, is that our dreams are never small or medium. The dreams are always very big. And I think there are solutions that are required to make these big dreams of small businesses a reality. And that's really what we are doing. As organizations, we've always looked at SMEs as clients, dealt with them one at a time. What we are doing is actually challenging that, asking organizations to build communities of SME clients together, bring them together, open them up to trade opportunities amongst themselves, between themselves, and provide them services that they lack because of the lack of economies of scale that they do not enjoy. That's what Global Linker is. It's bringing communities of SMEs created by governments, trade bodies, and corporations from various industry sectors, including banks, and potentially creating what will become the world's largest SME community and the most actively traded platform, because similar-minded organizations that care about their SME clients are bringing them together on one platform, and that's what Global Linker offers as a co-branded solution to progressive organizations, governments, and trade bodies.
That's great, Samir, and you're already hearing that we're restating the point from earlier that we're taking the term SME finance seriously. You've heard two people talk and you haven't heard the word credit yet. Now, you're going to hear it, and it's important, as the governor said, but this is about SME finance, and it's also about going beyond finance. And with that, I want to let Barinata say a little bit about herself.
Good morning, everyone. My name is Barinada Bema Alexander. I'm a lawyer. I basically work with SMEs. I'm the founder of Barinada Legal. Barinada Legal is a 100% SME-focused law firm. So we know that the problem with most SMEs is access to legal services, and the fact that by their very nature, they're very vulnerable, and these traditional law firms, conventional law firms, do not have the luxury of time, to work with SMEs. So what we try to do at Barinada Legal is to bridge the gap between the big law firms and the SMEs and startups that are just coming up.
So as every SME fintech knows, just because you're small doesn't mean you don't have legal and regulatory issues. But we talk about how bankers struggle with SMEs. Wow, think about lawyers, they probably struggle even more. They don't struggle with charging them the normal rates and using the normal methods, but which SMEs can afford that? So you're hearing about a different way. Now, Arnold, I'm interested in how Arnold is going to introduce himself here.
Well, my name is Arnold Ekpe. I'm chairman of Baobab Group, which is a microfinance group that operates 8 microfinance, SME-focused microfinance banks in Africa and 2 in China.
That's interesting. I'm going to supplement this just a little bit because you have noticed so far we have no one that said they're a banker on the panel, and when Ruben talks, you can see he's also not a banker. But Arnold had a life before what he did. He was associated with a small bank called Echo Bank, which I think many of you know, for many years, and a very distinguished career there. So we're going to use him for both perspectives, even though he's being very modest in his introductions. So Ruben, please, last but not least. You may have to lean that way. I hope it can pick you up. Try the other one.
Good morning, everyone. My name is Ruben. I head up Grab Financial Services. This is my first time to Africa, and I just want to give thanks to the MES for the invitation here and the governor of Kenya and the Kenyan people for really extending their warm hospitality. It's been really exciting seeing all that's happening in the fintech area. I describe it as reverse innovation. We can learn so much from you and bringing it back to Southeast Asia and meeting the needs of SMEs. So Matt was describing us as non-traditional. Indeed, Grab is a non-traditional platform. We started out as ride-hailing 7 years ago. We set out to solve the problem of creating equality of access, to give a platform where micro-entrepreneurs can thrive and earn a good living in Southeast Asia. In 2018, we had the fortune of buying over Uber's business. Since then, we've expanded into a super app, and that was also when we launched our financial services business. For financial services, right now we've got 3 main arms, which is lending, insurance, and as well as payments. So our aim is really to give MSMEs the ability to earn and thrive a full suite of financial services in order for them to grow their businesses and to protect themselves and their families.
So starting not from banking and finance, but from ride-hailing, but now getting into finance, and not just for drivers, but for many, many different sorts. So we have a very eclectic and interesting panel, and we don't have a lot of time, but we're going to try to be very good at bringing out the things. I want to start with Barinada, because we had a point even earlier about we shouldn't just focus on getting credit out to SMEs. We have to make sure there's literacy, there's compliance, there's understanding, but SMEs are small, and some of those matters are complex, and lawyers have to do a lot of training, which is why they charge a lot of money. How do you get over this problem to provide, effective services to the smaller market?
Okay, so SMEs need a lot of attention. And like I said earlier, that's one thing the traditional law firms cannot afford. So what we basically do is to make use of a kind of marketing strategy called education-based marketing. I believe that if you're informed and you're properly educated about certain things, you'll be able to make informed decisions. So we understand their peculiarities, and we try to, let them understand all their pain points, explain everything. We do a lot of webinars, a lot of physical seminars, a lot of events. There is this signature event I have, Legal Roundtable, where we bring experts and we bring SMEs together, and they, try to explain to them the legal aspect of their business so that they are able to thrive and then do business as they should and not shoot themselves in the leg, basically.
Tell us a little bit more about how you're using technology and how you're also using association with other lawyers to get more economies of scale here.
Okay, so a lot of SMEs are online, even virtually all of them. So currently we have a community on Facebook called Law and Business Community, where we have over 2,000 entrepreneurs. And what we do, like I said earlier, we use the education-based marketing system to reach out to them, and then we also have, there's this messenger bot that I have. So once you interact with my content, we automatically capture your data, and then we're able to send you messages. Now, we're a focused law firm. We're very focused, and that's just on the legal aspect of their business, corporate and commercial. But what we sometimes do is to bring in experts. For example, I have a colleague who is a blockchain expert as a lawyer. So sometimes we do webinars, and of course, we have them virtually, and they come to, she comes to, take out classes and all of that. So if we have more young lawyers or more lawyers who are interested in working with SMEs, there was a line that was on the screen this morning. The young people are only focused about cash. They are not really bothered about honor and fame. So if we're more interested in humanity and working with SMEs, we'll be able to reach out to more people. So if this is a call to lawyers to start thinking specialization and start thinking, well, this is just an aspect of tech I'm using. What we're trying to do later on, like I was discussing with my co-panelists, is to have an app where we can have all of these SMEs come on. Okay, so currently what we do is, so we render a particular service. Maybe you want a contract, or you want a particular document, or you want to start up a business in Nigeria, for example. And then we do the registration and get your business floated, but then you need to open a corporate account, or you need to maybe do some other thing, you need a business plan. Sometimes we just let it go like that. So what we're trying to do is build an ecosystem, build an app where you can actually get everything all in one place. So that's how we're using tech to make life easier for SMEs as regards their legal issues.
So this is really interesting, because we talked a little bit about open banking earlier in the meeting, and you think about open banking, you think about that Wells Fargo slide with all the services that Wells Fargo does, and how you have zillions of fintechs that just do one of those services, and how you can't be competitive as a bank and all. Well, maybe the same thing is true we should have open lawyering and have platforms where lawyers that specialize in different areas. Maybe we can reinvent law as well as as in reinventing finance, and I'm deliberately starting before credit here, because you get a lot on credit, and I want to turn now from Africa to Asia with Samir, because as you introduced, you're here at a fintech meeting, but you're not directly financing as part of what you're doing.
Absolutely. I think we're solving more underlying issues. So we talk about SMEs, and very often we talk about them in a single breath, but we do have to understand and realize that there couldn't be a more heterogeneous segment than SMEs. No two SMEs, even if they're in the same industry and similar ages, would have the same requirements and needs. Now, how do you solve a problem for small businesses who are as heterogeneous global around the world with a single solution? And what we've realized is that if you focused on two areas for SMEs, a lot of underlying problems, including of financing, can be resolved. And that is, number one, digitizing SMEs, and the second is connecting SMEs. In digitizing, I know organizations, and I've been part of one globally that has been spending and investing hugely in digital transformation. So how do you create a digital transformation for SMEs across the world and demystify that, simplify it? On our solution, for example, we are just doing three things that we are focused on. Number one, creating a digital business card for small businesses, which runs an algorithm for matchmaking behind it that allows SMEs to connect borderlessly, seamlessly, without any constraints. Create a digital profile for them. And the third is a digital catalog. The digital catalog finding itself into an e-commerce store capability, a B2B marketplace participation, as well as a supply chain solution, something that was talked about. Now, once you have this and you connect SMEs to each other, as well as to a set of services that they are looking for, knowledge components, as well as curated offers, all of these components bring together the ability to more intelligently offer them solutions that they require, whether it happens to be ERP-like solutions, or it happens to be supply chain solutions, or it happens to be financing, which really comes as a result of this. So I think the most important agenda that all of us need to take on is to help digitize our SMEs, and once they are participating in a digital world, their ability to therefore go on and start engaging with institutions, including financial institutions and non-financial institutions, becomes much easier. I'll just deliberate on one point.
And then let
which
me
is-
just
yeah,
let me
sorry.
just stop you there for a second, because I think this is fascinating, because the prevailing model, if I will, from years of working with banks was, it's up to you, SME. By the time you enter here, I need this, 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 and this. If you don't have it, I can't do for you. But both of you are turning this on its head. And you're saying, no, no, no. We're going to go out to the SMEs and we're going to proactively get them the tools they need to be ready for all this. And then it's a whole different way. And so when you work with a bank, it's about getting them to transform their models.
Just take two very short examples to illustrate the point. We have an e-commerce store creator for small businesses, and once a small business has created an e-commerce store, you know the total value of their inventory, you know how fast they are moving their goods, you know how many of their goods are getting returned, you know what their consumers are rating their products. Now, if all of that meets criteria which could really be invisible and kept behind, a bank could be making a working capital offer directly to the SME, saying, I know enough about you. Yes, I will need some more validation, but here's a preliminary offer that I'd like to make to you. The same way, when you know that a small business signing up for a solution has got a certain number of employees, a threshold of say 20 odd employees, can we offer them a payroll solution along with a receivables management and a salary account from the bank? And against the salary account, can we look at their receivables and offer them a receivables financing? Can we offer their employees a line of credit against the salaries that we know are coming into the account? So all of this becomes possible when you reverse engineer the entire program and don't go out with a product that you wish to sell to an SME, but solve their problems by knowing all the pain points that they are actually experiencing and build our solution sets around that.
And so to be nerdy about this, we're solving the asymmetric information problem, we're solving the cost to acquire, and we're solving the cost to serve, which are fundamentally the reasons that banks have always struggled with the SME market. Now, in your case, Marvin, you are not only doing some of this work, but you're also you're reinventing the credit product in some ways
100%.
on top of that. So say a little bit more about this.
Sure. So we've taken the approach, and in the previous slides, there's a great point made about the failure rate of SMEs. Where SMEs do not fail is when they're franchises. And what we've realized is franchises are a very defined process, and you have a back office taken care of by a partner that ensures that the pain points are removed. So Ovamba's done several different things. One, we've realized that the majority of African trade is just that trade. Second, in that trade, many people are what we call functionally illiterate. So we all, in this audience, very educated. But if you go in the rural areas, in informal markets, reaching those people means you need to communicate in their language and not using bank speak. Then you need to actually manage the full back end for them. So what Ovamba's done is taken the perspective of becoming a partner to SMEs, working with regulators to formalize the informal. Actually, we put our capital so there's full traceability, transparency of where spend is going. We eliminate a lot of fraud by doing so. And then we provide the data to banks so they can actually grow and scale. And we do so in the cash economy. Right? We don't provide cash, we should provide the goods, and therefore it's much more transparent. And we're doing so in very much fragmented frontier markets. So this is Cameroon, Central African Republic, not the Kenyas of the world. So we target the toughest markets possible, because if it works there, it can work anywhere.
And you're doing this, as you said, based on key inputs and other assets.
Absolutely.
And you're also you're making the contract itself dependent on the revenues that come in at the other end.
100%. So we believe in alignment. So by aligning our revenue and the revenue to our investors with the success of the SME, we are incentivized to make sure they're successful. They understand this as well, and that changes the relationship from a sometimes confrontational banking relationship. It's also very important because there are roughly 450 million Muslims in Africa, and they're historically among the most underbanked. So this is also Sharia compliant, which scales quite quickly in those communities as well.
And I'm glad you mentioned it, because I haven't heard a lot about Sharia compliance at this meeting, and yet, this intersects with a major problem in SMEs, which is that bankers also conventionally have looked to assets being only land and property mortgages or cash. And SMEs tend to have none of these three.
Absolutely.
And yet they have lots of assets. But the other types that if you can figure out how to use technology to make those assets truly securitizable, as you're talking about,
Yes.
then suddenly the world's opening up and it's a Sharia compliant world. So for all those hundreds of millions of people, it's something they've said they want, but they often can't get.
And it's individually investable. So we look forward to a day in which literally toilet paper can be traded to the degree as which you trade cocoa and coffee and other commodities, because we actually understand the movement enough that's actually investable and profitable.
Now I'm swapping from Africa to Asia in case you can't tell. So I'm gonna go way over to Ruben. I'm gonna skip Arnold for a moment, but he's gonna have plenty of time. And Ruben, to some extent, what you're doing in Grab is asset-backed financing on steroids, assets and payments-backed financing on steroids, because you're taking data that historically is not something that banks really, they may have had it, but they didn't use it in the same way that you're doing, and they're fine, and you're able to find out different things and make different decisions about the types of financing you're doing. Maybe you can tell us a bit more in depth about how you're doing that.
Sure. The bulk of our efforts in financial services is really around areas where we have an edge, a data edge. And we're very focused on the two segments of our constituents currently, which is first our driver segment, and then the second is our merchant segment. In my introduction, I forgot to mention, we use the word super app so frequently in Southeast Asia that it's worth for me to define it. So post acquiring Uber's business, we've also expanded into food delivery, parcel delivery, hotel bookings, flight bookings, and video streaming within our single app. The thesis behind that is that the handset capabilities of the most consumers in Southeast Asia are limited. In our data, we see a lot of people install and uninstall their application. And so what we've done is to pool the best of all services that can really bring tremendous convenience to the lives of consumer, and then house it within a single app. So back to the topic on SME financial services. So looking at our drivers and our merchants, our food merchants and our offline merchants, we've got tremendous data around their cash flows, their payments data, and how often they open for business, when they take a break, and more forward-looking earnings. And using that data, we're able to score them and determine their credit worthiness and to issue lines of credit to them. An area of distinction here is important, that we do not do this ourselves, we do this via partners. We are big on partnership. We don't believe that we can transform Southeast Asia ourselves. We believe in the proverb that was frequently cited earlier, that to go far, we got to go together. So what we've done is in every single country, we've partnered either with the leading banks or FIs through equity partnerships. And with that, we look for ways to combine data, where together our data gives us a more holistic view of our clients, and using our techniques, scoring techniques, be able to extend them credit. The other one that's really important to note is also collections. So a big part of what we do is really innovating in the area of collections. So our lending product, our insurance product, they all work on the rails of our payments infrastructure that allows us to do frequent deductions, whether it's daily, weekly, or monthly. And for these micro entrepreneurs, that means a lot. For example, in Malaysia, we recently, last week, launched a usage-based insurance. In the past, to drive on a platform, a driver would have to pay an annual commercial insurance. That's a huge outlay of money for many of these drivers. But what we've done was really fractionalize it, and now they can pay on a daily basis, as low as 2 ringgit a day, which is maybe around 40-60 cents per day, and that dramatically increases access for these drivers to come onto our platform.
That's a fantastic example, and it's showing how the payments rails themselves, they both enable you to offer the types of products that we couldn't do before, when we had to actually have people come to a branch, or even more expensive if we look at the way we used to do SME. Maybe we even sent our officers out, or micro, to do the collections. And at the same time, you're enabling that to become effectively another means of risk management, because as a merchant, as a driver, as a consumer, I want access to that payments, and the fact that if I misbehave, I might lose access to it is a major motivation to be honest. Now, with that, I want to turn to Arnold. Arnold, you're unique on this panel in that you've been a conventional banker but in a bank that has really been committed in a unique way to Africa's base of the pyramid for a long, long time. And now you're the chairman of a group that's running non-bank microfinance institutions and small business finance institutions in different countries in the world. So you're looking at it from both the bank and the non-bank, but more from the traditional side, both of whom we could say are potentially threatened by all we've been talking about. But Ruben was just saying that he's making partnerships, or is that what is that going to be the key to survival? How are both banks, and we probably have both bankers and microfinance institutions from Kenya and other countries here, what do they have to do to stay relevant going forward? Can they just keep doing what they're doing?
Well, I think the first thing to keep in mind is that microfinance banks are still banks. But my background has been primarily in transforming initially traditional banking institutions, which, as we all know, struggle to serve the SME sector. And now I chair one of the larger microfinance groups in Africa that has been focused over the last 14 years in trying to deliver financial services to the SME sector. And I think one of the things I've learned is that they have certain problems in common, but the microfinance sector has the ability potentially to address those problems in a much more meaningful and effective way. For example, there is a lot of knowledge and expertise within the microfinance sector that's not being effectively utilized to serve the SMEs. But also, much more importantly, the cost of technology to the microfinance sector has dropped significantly. In a conventional, traditional bank, you need to spend millions of dollars to set up a data center, to buy the servers, to get the telecommunications lines. Now you don't have to do that. Cloud means you can pay as you go. Open APIs means you don't have to basically develop the technology, the software. You can buy it on a pay-as-you-go basis. So the paradigm has changed, and so microfinance banks that serve SMEs are much more competitive and much more in a position to provide those services in a much broader and scalable manner. And I think for us at Baobab, we had the apps. We started with the apps, but having an app doesn't make you digital. You have to go through the whole chain. Is your middle office digital? Is your back office digital? Is the mentality of your loan officers digital? And then you start finding some very interesting things. For example, we all think of SMEs as people who continuously borrow money. Okay, they need loans. In fact, they're also very good savers. They need insurance services. They need pension products. Now, the traditional microfinance institution cannot do that on its own. But with open APIs, with low cost of technology, we're now able to provide a much broader range of services and start moving those people out of poverty. I don't like the word poverty alleviation personally. I like wealth creation. One is much more negative, the other one is much more positive. And so we're beginning to see a situation where microfinance institutions will begin. I don't think we're there yet, but we started the journey of beginning to make a difference to the lives of the SME sector, which in Africa, for me, is very exciting because it's a much larger sector than the corporate sector. The corporate sector is very small. The SME sector is very broad and diverse, and it does change people's lives in a positive manner.
But so we need not only to take advantage of the new technological possibilities, but if we don't have the cultural shift, whether it's in the microfinance institutions or the banks, we're not going to be able, it's not just about plugging and playing, right, to be techie about it. Now, I'm not seeing, maybe I'm just too old and incompetent, but I'm not seeing questions from you all. Come on. There's not a lot of time left. I'm sure that you have some thoughts for this panel. And if I'm missing some, maybe the organizers, if they see them on their screens, can send them to me in old school way. But look, we're doing a hard talk in the BBC sense is where the interviewer is kind of attacking the, and I'm trying, I hope you don't think I'm attacking these wonderful, talented people, but we're going to try to more hard talk you, and we started it with Arnold because I was asking him to challenge the microfinance and the bankers in the audience. I want to challenge now, there are a lot of policymakers in the audience. Who wants to volunteer from Asia, from Africa? What do we need? You know, we've talked about all these possibilities, but what's helping and what do we need from policymakers to not hinder this sort of change? We had the governors talking very openly about it, so I think they're going to be very open to a hard talk sort of, you know, speaking the truth to power here.
I actually have a question, just a quick show of hands. Policymakers in the room, I'm just curious, do we actually have any?
How many policymakers?
A few?
Oh, we have a few hands.
Perfect. For those of you from countries wherein you have tribal languages, do you allow banks or financial institutions, regulated organizations to serve in the tribal dialect, or do you require documentation, the information to be in the national language? Because it's something that we've seen as a huge barrier in French West Africa. People will understand, if you're less educated, their local dialect very well. But to approach a bank means now you're dealing in something you don't understand. There's no communication, and they just walk away, effectively. And that's where we come in. But I'm curious about your thoughts on that.
So that's a really interesting topic that I haven't heard before. So maybe you can try to make some connections you know, offline.
Absolutely.
After this. Any other suggestions, Samir?
Mine is more of a statement and probably speaking from my own experience of dealing with a regulator and happens to be in this room. So one of the things that Global Inca has partnered with is with the Monetary Authority of Singapore. And I wanted to actually talk briefly about this and how a regulator can play a significant role in helping small businesses and also ecosystems build. One of the key programs of the Monetary Authority of Singapore, working closely with the IMDA in Singapore, is a program called Business Sans Borders. And what that really talks about is that several ecosystems of SMEs will develop. And in order for us to take the maximum advantage of what we are collectively building as ecosystems, is why not allow ecosystems to be able to talk to each other using AI and data-driven models to be able to aggregate demand and supply across the globe. And that's a great initiative by the MAS and IMDA coming together. Global Inca is a founding member of that, so it really tells you that irrespective of your size or age, we have partnered with the likes of SAP and MasterCard and others, but irrespective of size, etc., where there is value for a broader creation, a regulator can play a significant role, and I would encourage more regulators in the room to actually look beyond the traditional areas of functioning that they have to help build environments and ecosystems, allow them to flourish and play that positive role. The one question I would have for regulators, and this is more of a food for thought, is really the whole emphasis on data localization is actually countering very often a lot of initiatives that industry is seeking to take in terms of digitizing and internationalizing. So I would urge more progressive regulators to kind of break that myth that the only way data is secure is by having it locally in country. I think as we are getting into the age of cloud services, that is something that requires to be challenged. So that's just a couple of small points.
So Arnold, yes.
Yeah, I had two areas, quite frankly, that I think it's probably not just the central bankers, but the much larger regulatory market needs to look at. One is the cost of data. In Africa, the cost of data is a significant impediment in certain markets to access for digital banking. The second area which I also think needs to be looked at is India had this very disruptive decision by the government to move everyone to basically electronic payment. Okay? Now, I'm not advocating that for Africa, but I think that the regulators in Africa should look at ways in which they can compel or urge the market to use more of electronic payments and move away from cash. The cash in the system is actually an impediment to providing financial services to SMEs at as low a cost as we'd like to. If we can get that cost of cash reduced, I don't think we can eliminate it entirely, but if we can reduce it, I think it'll be to the benefit of the SMEs.
Thanks, and thanks for reminding us. As I'm remembering my great friend and postgraduate colleague who passed away recently, Professor Calestis Juma from here in Kenya and Harvard University, used to be one of the people that gave us the term leapfrogging for Africa, but he also said at the same time, this does not eliminate the need for basic infrastructure. Without that, we can't leapfrog. And thanks for reminding us of that, Arnold, and also the to go cashless. Now, they're telling me that we have to wrap up soon, but I want each of my panelists, if you can, to be very fintechy, can we in tweet style try to come up with some farewell messages for our panel? And I didn't warn you about this, so I'm going to vamp for a second while I get you thinking about this. Sorry, we didn't get any other questions, folks, but I would have asked them if you'd done them. So with that vamping, maybe let me go down to the end, since we started down here. Ruben, you're the one who's the guinea pig for this.
Sure. I guess as a farewell message, I'm really excited by this collaboration that we're kicking off between Africa and Asia. See a lot of potential, and would love to continue to be part of this story and history building.
Thank you. That's great, and very tweet limited.
I think for an old-style banker, this for me has been very interesting, listening to some of the new ideas. But I think much more importantly is to bear in mind that the rules, the fundamental rules haven't changed. You have to do things, basically respecting the rules of financial services. Tech allows you to do it in probably a better, cheaper, and more efficient manner.
Okay, so on the legal aspect, I don't know how many of us have a jurisdiction similar to Nigeria where you're not allowed to advertise and openly come out, solicit for services and all of that. But tech is disrupting the way law practice is being done. So I would encourage everyone, and I would encourage policymakers and regulators in the house to try and work on their rules, and so that to make it, we are not allow lawyers to advertise, but create a fair playing ground for them to come out and reach out to these SMEs through digital tools.
And you're going to say you learned about disrupting lawyering here first. You heard it first in Nairobi. Samir.
Yeah, I think we've always regarded SMEs as the pillars of the economy, and I think it's imperative on all of us to encourage their growth and their betterment. And in doing that, I think if several organizations, governments and non-government organizations, corporations came together to try to create a very large SME community, allow them the free access to each other, give them trade and other facilities, services embedded into solutions. I think that's really the way to bring about a mass revolution and a change. And once the small businesses are empowered with this kind of a solutioning, and they get past this economies of scale issue and trying to fight for their own survival and growth, I think we'll have a completely topsy-turvy economy where you would see faster economic growth across the world and a much more happy world for all of us, because I think in the small business success lies the success of most of our economies and the consumer and the social impact that it can create. So that would be a very strong urge for organizations to come together and pool in resources and create this community and solve for them collectively.
That's really good. We're going to have to work with you on tweeting a little bit, but still it was very good.
I'll try to be more tweet-worthy. I think the key message is reach people where they are. I want to explain this a bit. One thing that we do is we move a lot of our interactions to voice-based computing. So people speak what they need to speak in their local language that gets transcribed and moved over. So if people can communicate without needing, even literacy itself is no longer a barrier. You enable people to really access not only financial services, but also taxation, reporting, all the things of governance.
So
really
communication conquers the literacy problem, #Obama.
Well
we
done,
put this
sir.
in
Well
a
done.
tweet, right? So I got to show that I can do it, even though I'm an old guy. But I will reserve one more for me. I think you're seeing that small doesn't mean simple. In fact, small is very complicated. There are lots of pieces to doing this right, but if you can do it right, the returns are enormous, the demand is obvious, and sharing to give a shout out to this meeting and our two governors. Sharing is key. So sharing is caring, and hashtag AfroAsia FinTech. I'm gonna get, there it is. Sharing is, where's the hashtag? Oh, they're not giving me the thing. Sharing is caring. Remember that hashtag. Tweet it to everybody so people know about this great meeting. Thank you very much to my panelists.